Good morning. What's up, guys? How we doing? Market is open. Let's get into it right away. Now, 22,000 is an area for us to watch here today. Bottom of your screen. Remember, we saw that flat top around 21.5, like 21.450 to 21.5. And we're now dealing with 22 as a result of finally kind of melting. I wouldn't say breaking, but kind of melting out of there. Morning, guys. How we doing? Josh, Doug, Ricardo, Step. How we doing? We kind of melted up out of that flat top, and now we're dealing with this 21.8 to 22,000 area, which is fine, by the way. I just want to make sure we're all aware that that has been kind of an area of interest. 22,000 on its own is a tier 1 level. It is not an S tier level, which is above tier 1, but it's a tier 1 level because they come around more often, so we base it off the 1,000-point increments. All right, so that's what we're looking at as far as market inertia. Again, I'm thinking range, unless we're given good reason to take a bet on a trend, which, as you guys know, yesterday I did, and the market went sideways all day, which I eventually had to manage due to time for a small profit, and that was kind of frustrating. So it's frustrating in the sense of opportunity cost, but I gotta tell you, I mean, I sat here and I watched pretty much every tick yesterday, and there's only opportunity cost if there's other good opportunity. And, you know, there's always trades, but volatility was really tight yesterday. So hopefully that picks up here today. Again, tomorrow we get CPI. Thursday we get PPI and initial jobless. Friday we have the Michigan prelim number. So volatility's coming, and we should, you know, ideally with CPI tomorrow, we should see a little bit more today than we saw yesterday, which would be a good thing. Because again, man, volatility right now is really low. It's been kind of interesting to watch. So I'm curious if you guys kind of got stuck in a swing yesterday as well, or if you just kind of scalped all day, or what was up with you guys. But right now, I'm thinking range until I'm hit over the head and it's time to bet on a trend. All right, so we'll see what we can do here. As far as news here today, there's not a lot going on. I mean, U.S.-China trade meeting early this morning. That's it. I mean, a couple of Trump things going on military-wise this afternoon, but I don't think that's going to move things too much, at least at a time that affects us. So we're pretty much free and clear to trade as we please, aside from, of course, the dreaded or maybe hoped for unscheduled headlines that have been burning so many people. So again, live stops are important, and I also think live take profit limit orders are important in case you get a big move in your direction. Less of a chance of you missing it. All right, so we are at 838, getting closer and closer to 840, 845 territory. Let these institutional orders clear out. Let the market kind of start to form some sort of structure. At least that can fulfill on itself. Self-fulfilling prophecy mentality, and then we can see what we got. Bruce, good morning. Says, good morning, Nico. Overnight was wild. Yes, I saw some of that overnight movement. We got a big pump. And then kind of what a lot of people, I suppose, would have got trapped in as a bull flag. This was like middle of the night last night. And then it dumped like crazy. Yeah, I saw some people got burned on that, unfortunately. I'm not big on trading the overnight session. It's just, it's slow until it isn't. And it's very difficult to predict when it isn't going to be. Look at this. We're getting a push here. Likely getting a headline. I'm not seeing anything coming through yet on the news feed, though. I'll let you know if we get something. Dan, good morning. How we doing? Yeah, tubed out. I managed it for a small profit that I would, based on the risk and potential reward of that trade, call basically break even. But I had to manage based on time because I started to run out of time because the market was going to close in 20 minutes. Yesterday was kind of I don't know. I don't want to say a weird day because the market, it just The market's never wrong. It's going to do what it does. But volatility was so tight. I'd say it's kind of a boring day, to say the least. Hopefully we get a little bit more action here today. We already have a big old bar. What's the range on that bar? 59, 60? That's better than what we've been seeing. All I'm seeing as far as headlines so far is Putin extending the oil sales ban for buyers observing price cap. I don't know. All right, we're into 840 territory, so a good chunk of the institutional volume is already through. Let's see what this bar brings. You guys typically trade overnight? It actually surprised me this morning when I saw how many people were either hitting that overnight session or got burned on the overnight session. And a lot of that movement happened at like 1 in the morning. So I guess I'm curious, is that common practice for a lot of you guys to sit up and trade, you know, till 1, 2, 3 in the morning? Because a lot of these people were US, they weren't overseas. Peter, good morning. You got a lot of European folks that tune in here. That's cool. I think you guys are, depending where you're at, 6, 7, 5, 6, 7, maybe 8 hours ahead. It's an interesting schedule. I mean, depending where you are in Europe, I mean, you could theoretically. It's almost, in some ways, it's almost an advantage because you could theoretically work a job with more typical hours, come home, and if you could get off maybe a little early, depending on your time zone, you could basically trade the whole New York session and then go to bed. Marshall, good morning. We're getting some added volatility. This is good to see. This is very good to see after yesterday, but it's going to be more telling once 9:30 hits. If the volatility is still held up. Yeah, I mean, look at this. Market's going to round trip, it looks like. This happens a lot. I'm not big on trusting these one-off big bars either direction, especially this early in the day. I mean, if you can structure a trade off a bar like that has like maybe a 2-to-1 reward to risk, arguably that's not a bad trade at all. That's a very reasonable trade, actually. But Problem is, with these big pushes off the open, coming into the open, immediately after the bell, no matter which direction they're in, they're pretty much 50-50, whether they're going to continue or reverse. So it's kind of hard to do anything that makes sense unless you can structure it with a positive, whatever that means, reward to risk, 1.5 to 1, 2 to 1, 3 to 1. Of course, remember, the more you ask for as far as reward to risk, the lower the probability is going to get. Because the market is always two-sided and we're always dealing in probabilities, not certainties. Just trying to catch it at the moment where we think the probability is a little bit higher. Yeah, Lee, I still use Thinkorswim daily. I like Thinkorswim. You know, honestly, I pulled up TradingView a couple of weeks ago to take a look at it. I hadn't messed with TradingView since probably, I don't know, 2020, 2021 maybe. And it has really improved. TradingView's a pretty nice platform now. It was not like that 4 or 5 years ago. I think I'm right about the time on that. But it's nice. I like TradingView. But it's just, you know, Thinkorswim, it's clunky. It's kind of heavy. If you're running on a lighter laptop, like, that's not very powerful, Thinkorswim is going to take up kind of a lot of resources. I don't know. It's just one of those things. It's like you've used it for so long. It ain't broke kind of mentality. But TradingView's good. Scooby-Doo, good morning. How we doing? Yeah, I mean, Thinkorswim is nice if you're doing a little bit of everything. If you're trading stock, if you're trading options, futures. What I like about Thinkorswim is you can look at. I like Thinkorswim for analyzing options trades, not necessarily executing them, but analyzing them and charting the stock behind the options chain. To me, I like, it's just too far gone. I just know my way around that platform for options way too well to switch. Maybe if you said, hey, you have to switch, Thinkorswim's going away, I'd probably go to Tasty for options, just because that's their bread and butter. They're in Chicago. It makes sense. But as far as like trading futures, I know a lot of people, don't love NinjaTrader, but I really like NinjaTrader. It has some weird glitches. It has some weird bugs. But I like it. I mean, it looks clean. It does have a lot of options. You can customize things like crazy. If they could just fix the bugs, I mean, it feels like an older platform. But I don't know, I tend to gravitate toward the lightweight, older platforms that they don't really feel the need to update too much. NinjaTrader is great, Lightspeed's great, and they're both kind of the same in that regard. All right, well, this is kind of a weird couple of 5-minute bars here. 30 seconds left here on this 5-minute bar. I mean, when you see something like this is pretty much what it's looking like on the 2-minute, right? which I think the 2-minute does give you a little bit better feel of what's actually going on here. This again, back to a 5-minute chart. I had to say right now, I would bet that we're probably in a trading range. And another trading range, slightly ascending, slightly descending sideways, wouldn't surprise me at all today. Maybe once we get later in the afternoon, that would break out. But if we saw a trading range for the first half of today, again, it's really early to say. So I say probably, meaning 55, 60% maybe, if I had to estimate. Yeah, but we'll see. We'll see if the bulls can break up through 21,890, put us into the nines. We've been struggling with 21.9 lately as well. I mean, really, I think it's a hesitation to go to 22. Again, I don't care. Just give me some kind of action and we'll trade it. Yeah, you know, Lee. So Lee says, for those of you guys that can't look at the phone, it was brought to my attention recently that I think about 60% of you guys are driving right now at market open. Trying to manage trades, listen to the stream, watch the stream, stop at red lights all at the same time. Good Lord. Lee says, I don't think it's a good idea to trade off the platform you use as charting. That's my IT background talking. Yeah, you know, NinjaTrader, I don't seem to have problems with it. This is really, honestly, the first time I think ever that I've executed all my trades on the same platform that I'm doing the charting on. Historically, I've always separated the two. And it wasn't necessarily on purpose. It was just picking, okay, what do I like for charts? What do I like for executions? And then I put them side by side and kind of link them together, almost like they're one platform on my computer, but they're separate. So for example, a really great setup is charting on Thinkorswim and executing stock trades on Lightspeed. Because it's, you know, for trading stocks, it's the fastest, I think, by far. Centerpoint's a good one too. But for futures, man, Ninja is kind of a all-in-one, I guess, if you don't I guess if you don't consider the connections with Rhythmic and Tradeovate and all that, but kind of is separate at the end of the day, kind of. All right, so bulls are trying to break through 890 here. Let's see if they can get 21.9. Again, 21.9 on its own, that's going to be a tier 3 level. I'm not really too concerned with that by itself. By the way, if you're just joining us here today, as far as news, relatively slow news day here today. Up top, of course, June 10th. Not a lot going on. Trump's got some military stuff in the afternoon. That's really it. But scheduled, right? We'll see if we get unscheduled headlines coming through, which we likely will at some point. Peter, good morning. Happy birthday, Joe. Let's get it done today. All right, so again, there's the 5-minute look. It's kind of a lot of never know the right word to describe this. It's a developing range, we'll put it that way. And on the 2 minute, you start to see, oh, okay, I see what's going on. Market is trying to form a little ascending channel. You can see that top wick here, this is again a 2 minute chart. I mean, it looks relatively weak. Wouldn't surprise me to see an attempt at a break downside through wherever you want to draw this ascending support. You could draw it probably 3 or 4 different ways. It wouldn't surprise me to see an attempted break. A lot of bears getting short and probably getting trapped as we head back into the range. Again, just talking out loud here. That's an interesting thought, actually. Let's see if we can maybe get something that we can do with that. Yeah, London was a crazy session, Lee. Was the range on it really 200 points? Yesterday's entire day range, I think, was about 142 points, if I remember correctly. Which was kind of frustrating. But that's okay. We still made out with a little bit of money. Not nearly as much as I was looking for on that one trade. So, I mean, look here, look, 2 minute. Right, we're testing. Little ascending support. Draw it however you want. There's no right or wrong way to draw it. Everyone's going to see it differently. Don't overthink those things. If you overthink it, you're only going to box yourself in. Because everyone's going to draw it a little bit different every single time regardless. So just draw it how you best see fit. And now, like we talked about, it wouldn't surprise me if we see the bears try to break this down. Maybe get it somewhere in this region. And then revert back to the mean and kind of head back into the channel. So I gotta tell you, I'm really interested. If we could see a bar close kind of near low of day, and then get a reversal bar back into the range, I'd get long. Because I'm seeing a trading range. And at that point, if it does break out, man, it'd stop me out and I'd be a happy camper either way because we'd get some volatility going. That's kind of my first thought here of the day. Yeah, Mel, when you buy the Take Profit Trader test, you gotta make sure you use code BIG, and then when you pass it, they won't charge you anything. There's no activation fee. Usually, if you don't use the code, you pay full price on the test, and then you have to pay an activation fee, which is like over $100 when you pass the test. But if you use the code, you get 30% off, and they waive the activation fee, which is a really big deal. Depending on what account you get, it makes it like half price, maybe less. All in. Well, I mean, we're seeing 35, 50 point ranges on these bars. I mean, that's not bad as long as we can hold it. Again, these are 5-minute bars. Get that ATR creeping up. Ideally, if we can keep that above like 30 on a 5-minute chart. On a 2-minute chart, which, I mean, think about it, right? In 2 minutes, you expect the range to, on average, be lower in points on each individual 2-minute candle than it would on a 5-minute candle. So on a 2-minute chart, you guys know, when I'm looking at a 2-minute, if ATR starts dipping below 25, I slowly start leaning a little bit heavier into negative reward to risk. Because the market's usually in some sort of range or channel. And that makes sense to do. However, on a 5-minute, you know, if ATR, like yesterday, we saw ranges on the 5-minute chart of like 10, which puts the 2-minute chart somewhere between 5 and like 8. That's really, really low. Really low. Probably the lowest we've seen since I started the stream a couple months back. So hopefully we can clean that up today. For sure, I think CPI is not, you know, it's not going to hurt. PPI Thursday, Michigan number Friday, which is not nearly as big as CPI, but it's something. Yeah, Mel, for Take Profit Trader, they're not doing codes for resets on fundeds. I mean, at least not right now. I don't really think that's something they do at Take Profit. So you got to kind of run your numbers and figure out. For those of you guys who don't know, Take Profit Trader, if you blow a funded account, you know how at Apex you just have to buy another eval and start over? At Take Profit Trader, they actually give you an option to pay to reset the funded account, and you're just funded right away again if you pay, but it's not super cheap, right? So you gotta run the numbers and try to understand, okay, does it make more sense for me to spend the time, another 5 days in the test, 5+ days in the test, and get it back for ideally cheaper than the reset costs, or is their opportunity cost too high where I should just pay the lump sum to reinstate the funded account, and then I have those 5 days to trade? At the end of the day, that decision really comes down to, do you have edge? If the answer is you are profitable in the average month, in a lot of cases, maybe you should just pay the lump sum. If you can, obviously, I'd easily afford to do so. It makes a lot of sense. But it's not cheap to reset a funded account with Take Profit. But again, if you don't want to pay that lump sum, you can always just buy another test and do it that way. Yeah, Joe, last I checked, I have not had to do this. At least not yet at Take Profit. Last I checked, the reset cost if you blow a funded account at Take Profit, man, I'm trying to remember. I think a 25K is like 450. Yeah, Michael says funded reset is 650. I assume he's talking about the 50K account, maybe. I do know that the 150K account, I believe, is $1,500 to reset one 150K funded account. But again, you can get a new account for like 10 times cheaper if you just buy a new test with the code. Or you can reset it and have those 5 days to trade. And again, if you have edge, a lot of times just paying that lump sum is worth it because of opportunity cost. You have to think about it that way. So I don't know, it depends. Oh no, good morning, how we doing? Yeah, exactly. You got to ask yourself that, and I don't know. You got to run the numbers. In some cases, you're not going to know the numbers, and at that point, you just got to do what you think makes the most sense for where you feel like you're at in your trading. TC, are you not hitting the like button, brother? What's going on? Now this is where most people go, oh my god, I'm shadow banned. They are trying to push me down. Who's they? Gains, wrench, question. So I got this eval like 3 weeks ago. Does the new single day pass go into effect while I already have an eval? Gains, are you talking Apex? And when you bought it, did you use the code? I gotta know those two things. All right, so you guys can see this 5-minute chart is looking kind of bizarre. The 2-minute is certainly in a little wedge. So this is gonna break one way or the other, and when it does, we can finally get some halfway decent going. Yeah, Gaines, you should be fine with single day pass as long as you bought the eval 3 weeks ago and you used code BIG. If you did that, then you can pass the eval at Apex in 1 day. All right, let's see if the bears here can break this downside. Again, this is a 5-minute chart. So that's what this is going to look like on a lower time frame. This is the 2-minute chart. Just a clear wedge. Yeah, vibe. I love Apex, 90% off sales. Next, they should have no activation cost. I don't know. I don't think that'd work with their business model. Don't get your hopes up. But that would be wild. All right, come on, Bears. Somebody, break this little wedge so we can get to work here. Sounds about right. Mario, good morning. Yeah, Adam, yep. Apex right now, to clarify, is not 90% off right now. Right now it is 80% off, but it is also 80% off on the rebill, which is not always the case. So it's a pretty damn good deal right now. Christopher, with CPI tomorrow, I would, if I had to guess, I think we're probably going to see a morning maybe similar to yesterday, and then an afternoon that picks up a bit because CPI hits obviously before the New York session opens. Well, at least the bell rings tomorrow. So I think we're probably going to see some volatility this afternoon. I, of course, could be wrong, but that's pretty typical coming into CPI. So, you know, I mean, clearly this is a range. Again, it helps to have a smaller time frame, but if you take a trade on a higher time frame, don't manage it on the smaller time frame. Try to manage your trades on the same time frame you took it on. But, you know, looking at a 2-minute chart, you can clearly see this is just a brutal trading range, which we can trade. However, in a range like this, what I'm most interested in is, hey, let's see a test of the outskirts. I don't really care which direction. And then let's see a small signal bar, small, back to the direction of the center of the range. And the reason it has to be small is so it doesn't push us too far into the range, because I don't want to take a trade in the middle of a trading range. So, you know, honestly, we're looking here. If we could get a setup kind of like this, small little signal reversal bar, and I can short it still in like the top 25-30% of the range-ish, or, you know, mirror that to the downside, I'd be happy to do so. But right now, you know, the last thing I'm thinking about, unless something hits me over the head and it's like it's time to do this, the last thing I'm thinking about is betting on big breakouts. Trading range. Stay as dumb as you can. I think a lot of you guys here and a lot of us are almost, in a way, you know, this sounds like whatever, but I think a lot of you guys, a lot of us are too smart for our own good. Markets have inertia. They're very resistant to change, and that goes on every time frame, whether you're looking at, you know, a year or the last, you know, 25 minutes. So sometimes the trades feel a little unnatural. You're like, this thing's gonna break out. It's a trading range. It's probably not. It could, it might, but it's probably not going to. But you still gotta have live stops, because the one time it does, you don't want it wiping you out. Do you like trading the 2-minute or the 5-minute chart for day trading? I like both. I think if you're like, hey, you could only trade one, which would be kind of a weird ultimatum, but if I had to pick one, I'd probably have to pick the 5 just because it's so much more heavily used. But I really like how they work together, the 2 and the 5. That doesn't mean that the 2 is right. You can use the 3, you can use the 1. For me, the 2 and the 5 are just a balance, and they seem to work well together. Where, for example, you know, when I'm looking at the 5-minute here, I look up at the 2-minute, and it's like, oh, okay, clearly this shows the trading range even a little bit better. You see the breakup and the actual moves, right? Whereas when you go to the 5-minute, like here, you're just seeing big bars. But listen, use whatever time frame gives you the best balance of quality and quantity of trades. The higher the time frame you go, the higher the quality of the trade, but the lower the quantity. The lower the time frame you go, on average, the lower the quality of each trade, but the higher the quantity. So you can have edge on any chart. You can have edge on a 15-second chart, but you're working very hard all day. You're making extremely quick decisions all day. And I know in the early days, I thought this too. That sounds easy because you can think quick, you're smart. You know, you can do this. And then you start doing it, and the longer you go, the more I think you start to realize, like, there's a lot more to think about for each trade than I really even thought there would be. And the more years you do it, the more you're thinking about for every trade, and that takes time. And when you're trading a 15-second chart, even a 1-minute chart, in my experience on, like, futures, I think it's too quick. You're trading too many bars every day, and you start missing things. You don't think you're missing things, but you start missing things because you're not giving yourself enough time to think it all through. Which is why I think the 2-minute is a great fast chart, and the 5-minute is just a great chart overall. Soapy, CPI is an inflation read. It's kind of like the headline inflation read that the media focuses all of its attention on. Even though the Fed looks at other numbers, the Fed really isn't that concerned with CPI. A lot of people don't realize. But CPI is the headline read that, for whatever reason, gets all the, probably because it affects people, gets all the headlines in the media. Yes, I mean, see, you know, Clinton, I get it. I get it. I've been there. It's attractive to want to trade a really fast chart. Because, I mean, the reality is, if you have an edge, you should take as many trades with edge as you can. So it's like, okay, well, I have an edge. Charts act pretty much the same, no matter which time frame you're on. The monthly chart, I mean, believe it or not, the monthly chart and like the 15-second chart, the patterns are no different. They're the same. So it's like, well, I'll just trade the 15-second. I'll make a bunch of money. But the problem becomes decision fatigue happens very fast. Even if you're young, smart, top of your game, decision fatigue is very real. At the end of the day, we're human. And you miss things. So if you want to, if you're young, you think you're a pretty smart person, and you want to just try to make as much money as you can, and you have edge, you should trade the fastest chart that the market allows, meaning it's not just super wicky. Like right now, you know, 15-second chart is going to be super wicky because volatility has been so low. But you should trade the fastest chart that you feel like you can trade the entire New York session and miss almost nothing. And a lot of people, even a 1-minute chart, when they look back, they're like, oh my goodness, half the trades I was missing something because it's too fast. It's not enough time. You know, really on a 1-minute bar, you have maybe 30 seconds to really think things through, maybe 45 seconds to really think things through, because on the rollover, you're still thinking about the last bar, and on the close, you're getting ready to execute. So, I mean, really, 30, 45 seconds to think everything through, I think you miss things. So the 2 minutes, a good compromise. The 5 minutes, a great chart. It's, I think, more sustainable to trade all day. There's like, I don't know, what, 80 bars or something on a 5-minute throughout the day. A 2 minutes, like 200 something bars. It's a lot of bars to have to think about. All right, well, ATR is holding at about, I don't know, 26, 27. Which is not great, but it's not awful. We can work with that. finding myself watching the 2 minute a lot here. Just because the 5 minutes really tight is the best way to describe it. We're seeing like single bar legs, which, you know, it starts to get kind of tough to really get a half decent read. This shows things a lot better. This is a 2 minute chart. But I do still think I'm going to execute on the 5. I think it's if you're gonna manage on 2 different charts, I think it's okay to kind of start on the 2, and then if you want to manage on a higher time frame, or start on a 1, manage on a 5, start on a 2, manage on a 15, that's fine. But going the other way, I think, starts to cause problems because you start tricking yourself and seeing things that aren't super relevant to your trade. Well, old school, I appreciate you. It's not my birthday, though. It's Joe's birthday. But I appreciate you wishing well. Hope you're good, too. Now, again, really what I'm interested in right now, these tight ranges can kind of be a little bit tougher, especially if you're newer. These tight ranges, a lot of times, maybe you just want to avoid them. However, for me, what I'm thinking about here is, if we, again, it's kind of tight, but if we can get outside pushes, you know, even if we break it, I don't mind. And then in the bottom or top 25-30% of the overall range, to the best of our assessment, if we can get a small reversal bar that's heading back toward the center of the range, I'd either get long or short on that. I don't have too much directional bias right now because we're sideways. Yeah, Jeff, when I switched from Replicanto trade copier to the affordable indicators copier, I don't remember. I think I had issues, I remember. I had to... I'm pretty sure this was my own doing, because I was in the back end, like, programming a few different things, and I think I messed one of them up, and then I had to... But maybe you're right. Maybe it was just the Replicanto messing it up. I assumed that I did it. So when I switched, I actually had to completely uninstall NinjaTrader and reinstall it, and it was kind of a pain. It took me some time, but I got it working. Well, the range on these bars is starting to calm down a little bit. We're getting down into the teens. 16, 17, 18 points here per 5-minute bar. Again, that's low. That's more like what you'd see on a fading volatility 2-minute chart. But this is a 5-minute chart, so again, it's low. But with CPI tomorrow, the inflation read 7:30 Central. I think we're probably going to see some volatility in the afternoon, at least a little bit. But until then, let's see what we can put together here. Yeah, Panther says, I wouldn't wish this price action on my worst enemy. You know, there's always something that we can do. But, I mean, you're right. When we have this kind of day, and I mean, you look at the range, it's not large. I think a lot of traders, they have the right idea and they would be profitable if they just stopped taking trades in the middle of this range on days like this. And they give it all back. And I don't think they put 2 and 2 together because they just see themselves as a losing trader. It's like, well, you actually have the easiest problem to solve, which is just remove the bad. When you see this, again, especially if you're not really sure if you're profitable yet, when you see this, for a lot of traders, it's best to just wait for this thing to break. And then you can start taking trades. But this is a tight channel. And a lot of people, I don't think, benefit from trading it because they end up taking too many trades in the middle of the range. They're not patient enough. And when it does break out, they end up catching a huge loser because they're not managing risk because they, you know, these always break. You have to assume that it's going to remain in a range. If you're going to trade it, you have to assume it's going to remain in the range forever until something hits you in the head and says, hey, we're breaking out. And then when it breaks out, you got to make sure you have your risk managed, which is why it's important to run live stops always. Mulatto, could you explain ATR? ATR stands for average true range, and that can mean a variety of things. That can be the average true range of a day. It can be the average range of a bar. Here I'm talking about it in terms of the average true range of a 5-minute bar, and that's calculated down here. It's in blue, and that's based on the average of the last 10 5-minute bars. So you can see each individual bar in yellow, the range of it in points, and the blue is the current average. Okay, Austin, this is a really good question that I think a lot of people should look at. On a breakout of a wedge like this on these range days, would you look for a continuation setup since a retest setup would have a higher probability of just going back into the range? No, I would not look for continuation until I determine it's pretty obvious. Again, range day, range day, range day until something hits me across the head. And if I'm late to recognize it in someone else's eyes, good. It means I did my job. If someone else is quick to recognize that, fine, today. And then 80% of other days, they're going to be wrong. They're going to be early. So I kind of want to go out of my way on a day like today to be late to recognize the trend. Because if you find yourself constantly betting on breaks on range days, you're going to be wrong 80 to 90% of the time. And can you really justify that and make the math work on your reward to risk? The answer is probably not. So no, on a break like this, I'm not assuming, like for example, if we break this high here, A lot of people would say, oh great, it's going higher. Maybe it is, maybe. But probably what the market's going to end up looking at is, okay, ascending channel, ascending resistance, ascending support. Go test that general region of the ascending resistance and fade it back into the range. That's the more likely scenario. Again, could it break and just rip, or we get news and it just rips? Sure. And if it does, I'll stop out if I took a trade and we're fine. But betting on that is going to get you chopped up on days like this, especially in markets like this, especially where it's just range day after range day for weeks at a time. Everyone likes to sell that the secret is like a setup. That's not even close to true. The secret to all of this, if there is such a thing, is faith in the market inertia and not trying to outsmart everything, because you don't have to be a genius to do this. It's arguably almost better if you understand the math and you're not all that smart because you can just kind of have faith that, okay, it's a range. It's a range. I'll just short whatever kind of confirmation I can possibly get. If we get a push higher and then a small bear bar, I'll short the bear bar. Back to the center of the range. Oh, look, it turned into a trend. Great, I can trade the trend. I get stopped out of that range trade. Now I trade the trend and make it all back and more. It's really dangerous. And this is partly ego. It's partly being too smart for your own good, and I get it. But when you're looking at this chart, if you're like, okay, this is going to be the breakout. It's probably not. Chances are it's not going to be. Maybe you get lucky sometimes, but still, the amount of stop outs you're going to take, it's going to wipe out the time or two that you were correct. And also a really easy thing on Nasdaq is don't use too tight of stops. Don't be using 4-point stops. Your timing is never going to be good enough to use 4-point stops. It's just too volatile, even on a day like today. You know, and I think that becomes pretty clear when you start to understand why you actually get paid. Why is there so much money to be made here? Because you're putting on risk. You're getting paid to put on calculated risk. If you're not willing to put on risk, you're not. How are you going to get paid? If you're scared to lose money, you're like, okay, I'm gonna risk 2 points, and I want to make 50. Well, probability on that trade, just the basic math says probability is extremely low. Every once in a while, you'll be right. And almost every time you're going to get stopped out. I don't think the math works. At least in most cases. No, this is my execution screen. I'm flat right now. A lot of wicks. I mean, there's information in here, right? Market's well balanced, but these tight little balance periods, they don't last. Right now we're looking at maybe 20 points, 25 points in this range. But I'm still thinking about this range as kind of the whole day's range. But I mean, goodness, you look at the whole day's range. What is it? Oh. 75 points. Wow, that's tight. That's tight. The whole day's range is 75 points. All right, I'll be back in 2 minutes. I'm gonna grab some more coffee. Hopefully this range will expand to about 300 points in the 2 minutes I'm gone. All right, is the range at about 400 points? It's unchanged. The ATR is at 22, 23-ish. Yeah, again, you know, it's not the end of the world. It's just really, really tight. Paul, any thoughts on Tesla? Not really, honestly. Stocks, you know, stocks that have kind of like, I guess you describe it as drama on the side of the executives, to me, scare me to hold overnight. Now, like a small cap momentum stock, all the drama is on the side of the traders, which is good. That does the opposite of scare me, because that's a lot of edge, because people make bad decisions. But I've gone on this rant before. I'll keep it brief. I'm not big on holding huge positions overnight in individual stocks that I think are unpredictable. Like the CEO could come out the next day and say something that I'm not in control of. Whether I like the CEO or not, I'm not into it. I don't want my fate in the hand, so directly in the hands of one person. So, I don't know, I guess those are my thoughts. And by the way, that goes for every company, not just Tesla. And now you also have the problem of you know, half the country has been kind of alienated from Tesla, which, like, if you're looking at this from with a capitalist perspective, that's not great, because half the country has money. And if half the country is like pridefully avoiding buying Tesla stock because they're like, I'm not going to own Tesla because I disagree with Elon. It's like, okay, tough guy, but I don't want to own that. Because that's kind of tough, right? Like, you just removed half the buying pressure. It's like, it's also kind of unpredictable. There's a lot of drama around it. I don't know. All right, width of this range now is, again, about 25 points. There's a lot of arguments that could be made here. I mean, you look at the 2-minute, we could argue, okay, we're in a very soft bull channel. Fair enough. I wouldn't argue with you. But then you look back at the 5 and it's like, no, we're clearly in a trading range. Also, fair enough. So my ideas are kind of based on both of those perspectives. You have to, I mean, again, like a lot of people, they'll take trades and their degree of certainty is very high. And I think that that's silly because the market's always going to be two-sided. The best probability you're ever going to get is about 70% on a 1-to-1 reward to risk. Almost every other time, it's going to be a lot closer to like in between the spectrum of 60-40, 40-60 probability-wise. Again, assuming a 1-to-1 reward to risk just to keep the numbers simple. It's a two-sided market. You know, if the market's going really, really high, and you're like, you know what? This is way too high. There's no way it goes higher. Not a chance. And you sell. You short based on the idea that the market has gone too far. Well, you have to sell it to somebody, right? Who are you selling to? If institutions make up 70, 80% of futures volume, you're probably, chances are, selling to an institution. Who's buying? They're buying. You're selling. Why are they buying if you're so clearly correct, right? So again, think in probabilities. Put the ego aside. There's no certainties here, but there is edge, and that's all we need is edge. The casino has zero certainty at all that if someone comes in and bets $100,000 on one hand of blackjack, there's It's basically a 50-50 shot with about a 1% edge toward the casino. And they'll still take the action. Sample size plus edge. Man, time's kind of slipping away here. It's already almost 9:50. We're gonna get something here. Yeah, Anonymous. So would trading another instrument like crude oil, etc., be advisable for new traders, or should they just stick to one until they get the legs under them? I think you should probably just stick to one. I don't really see any reason to have like 8 charts pulled up and just distract yourself. But I mean, listen, if long term you're like, I want to trade gold, crude, and the Nasdaq, or you want to trade, ES, gold, and crude, yeah, fine. But at the end of the day, the patterns are very similar. There are not a lot of differences in the patterns. So the way that I look at it is like, well, if you want to expand your playing field for finding potential patterns, then that makes sense. Which I've also been thinking about here in a slower market like this. But while you're still getting the hang of it, focusing on one, I think, is probably beneficial. Another argument there, by the way, that I've thought about a lot as far as like switching between crude, gold, Nasdaq, ES. One of the main issues there is you have to be able to keep it straight effortlessly. The risk management side of things, and point ranges, and your contract size, and how many dollars per point is the name. With the contract, I suppose. I think that's easier said than done, unless you've been at this for 25 years. So in a lot of ways, it's almost just easier to stick to one, especially early on, but even maybe long term. But yeah, I've been thinking about looking at crude and gold just because the market's been so tight. All right, market maybe expanding a little bit. This little range here is now about 30 points. All right, there's the test of the 5-minute 20 EMA, which has been somewhat relevant here today. The 2-minute 20 EMA, no one cares about today, seemingly. But even the movement around here has been kind of sloppy after the open. Again, this is the 5-minute chart. Yeah, Joe, you know, volume weighted average price is great. I like volume weighted average price. I think it's kind of, honestly, it's kind of interchangeable. If you want to use like a 20 EMA on the Nasdaq, fine. If you want to use volume weighted average price, fine. I think of the 20 EMA as oftentimes kind of just like a faster view up. And, you know, it's used heavily. I use volume weighted average price on every chart for stocks. Where I think volume plays a little bit more of a role, just because the futures market is so deep that I think it takes a little bit more of a back seat, at least in my head. But it's not right to use volume weighted average price for futures. It's not wrong to use it. I mean, it just is. I don't know. I could swap out the 20 for VWAP and be totally fine. And maybe I will, who knows? But right now the 20 EMA, I just have it up for structure, for context, because it's watched. But I refuse to put too many things on my chart. It's distracting more than anything, more than helpful. Willie, good morning. All right, here we are. Here we are, getting an attempted breakout of that more recent little channel. You can see the bulls are going to step in. I mean, you can really see it on the 2-minute chart. They're going to step in. It's a range day, right? So they're going to try. Now let's see if the bears can push it lower and then really expand this range back out, which is right now is what we need. I'm looking at the whole day as kind of the trading range. And this second kind of half here, this has been a pain because it's already a small range, and then it sucks down even further and we get a whole bunch of wicks. So if we can expand this baby back out to the full day's range, which by the way is only 75 points, that would be great to see right now. Okay, we have 60 seconds approximately left here on this 5-minute bar. Again, I think the lower this gets right now, the better. Because right now we're pretty much at the 50% spot of the entire day range. All right, there we go. There's the rollover. There's another attempt to push lower. Good. Just get this thing to the outskirts. See that big bull push? Range marker, right? So I'm watching to see how this bar closes. And if it can close clean, I just might be interested. However, we have that 5-minute 20 kind of right there. It's been tested a lot today, so it starts to lose relevance as it gets tested a million times over and over. And this bull bar is no longer very small. We're kind of headed back to the center of that range, which again is no man's land, at least for retail. There's a lot of volume in the middle of the range. It's institutional volume. Most retail traders, if you're taking trades in the middle, like 30%, like just visually the middle of the recent updated range, chances are you're going to get chopped. Not a lot of edge in there. So in ranges like this, what I'm looking for is pushes to the outskirts and reversal bars that stay small and close clean. That's what I want. All right, there's the rollover 5 minute. You see it closes right in the middle of that channel. But this is good. It's widening things out. Now the range of this channel is about 45 points, which is much better. Before we were seeing about 20 points. It opens up a lot more potential opportunity. I have a feeling a lot of people are getting chopped up today. These ranges can just be a death sentence for anybody who's not, well, I suppose experienced. I mean, really, again, taking trades in the middle of the recent range, you kind of got to look at it as like an always updating thing, right? Look at each individual leg as kind of the newer range, but I'm still keeping in mind the full range of the day that was put in, you know, by this bar here and this bar. I'd really like to see this expand back out to that. Again, it's only 75 points. The entire range on the day is 75 points, which is tight. Lee says 21,822 will be your reversal point. You mean back upside, Lee? All right, I'm going to hold you to it. To the tick. Just kidding. Yeah, Chris, man, I wish I had the answer to that question. It's been a problem for me for years. But what has helped me is warming them up with really light dumbbells at the beginning of a training session that's going to heavily involve your shoulders. The dead hang thing also can be okay, but just a warm up, just get some blood in there. All right, headline here. U.S. and China have concluded trade talks in London. Well, those trade talks didn't do a whole hell of a lot, did they? Getting a lot of wiki 5-minute bars. Oh man, well ATR is just above 20 on the 5-minute, which again, like all we've done the last couple days is complain about volatility. It's all right, it'll pick up. We got CPI tomorrow. But I am by no means giving up on today. We'll get something here. ATR at 22 currently. Here's what the 2 minutes looking like, by the way. It's a little more defined on the two, these channels. It's kind of constantly updating. All right, I'll be back in a couple minutes. Won't be long. All right, we're back. It's funny you guys bring up the pre-workout thing. I have considered mind supplements. Though it's oftentimes more than it's worth. Yeah, it would essentially be a nootropic mix. I have a formulation in mind, but the problem is what I like. I don't know if a lot of people are into it. A lot of people are really into the nicotine these days. I'm not into it. I can't do it. I think there's partly a genetic factor there. I can't stand it. But you mix up a little bit of caffeine, you mix it with beta-alanine, I love it. That's my thing, but a lot of people can't do the tingly sensation. It's not just for training, by the way. All right, another headline here. U.S.-China talks are ongoing. They were just concluded, but I guess they're ongoing. All right, this range here now, before it was 20 points. Plus maybe 30, 35 points here now. Yeah, Panther, cigars are cool. I don't know, I'll smoke a cigar once a year. But like some people, they love a lot of the world. Not some people, a lot of the world. They love the feeling of nicotine. I don't like it. I don't know why. I think it's a genetic thing. I don't think I could get addicted to it if I tried, so I don't use it ever. But a lot of people, I mean, it's more popular than ever, I'd say now. Luke says, late to the party, I have a question. I passed the Apex eval. Is the lifetime fee a one-time payment? Yes, Luke. It is a one-time payment. I believe it's actually one time, and then after 10 years, they will charge you 1 penny. I think that's how it's structured. It's probably just a payment processing thing. All right, good. I gotta tell you, I feel like things start to feel like they're cleaning up a little, at least for the way that I trade. So if we can get a nice push down toward the low of this channel, even breaking it, ideally, to hit out whatever stops are there. And then a nice, clean, small reversal bull bar. If that happens to the upside too, reverse. Then I can finally put something on. All right, Lee, let's see if 21.822 holds, brother. I'm watching to see if we get a nice little reversal candle. Again, small would be ideal. And I would bet against the breakout if we see an attempt here. Finally getting some movement. This is good to see. We're getting a couple of headlines here. U.S.-China trade discussions are ongoing in London. U.S. Senator Graham said no tax on tips or overtime may not fit in the big bill. I assume that means that we would need many bills. Yeah, I'm more interested in the movement itself, to be honest. Look at that push. Goodness. That might have been a second headline. I think that was definitely a second headline. Thank you. Finally getting some volatility here. This is great. That just expanded the range by about double what it already was. Not quite double, about 50% extra. Hey, Lee. There was your 22, man. Nah, I won't do that to you. We'll see if that ends up reversing and holding. Again, a reversal back into the range is depending on what the headline is eventually relatively probable. Look at this push. Yeah, Taz, no news coming through yet, at least for that second push that we got down through 21.8, I suppose. We were already moving down, I think, off of those U.S.-China headlines and Senator Graham. And then we got a second or third headline that has yet to come through. Here, Trump tells Fox News, Iran is becoming much more aggressive in nuclear talks. Yeah, maybe. This is what we needed today. Something to shake things up. This is beautiful. Now we can finally maybe see some development here. Now again, right there is a prime example why every single stream for the last month, I've started by saying, hey, live stop orders, right? Hey, put out your limit orders in case we get a big push so you can catch a big profit and not miss it if it happens to trigger that wide limit. Even if you don't intend on letting it go that far to take profit, have the order out. Why not, right? If we get that, you get an extra 70 points. Okay, now, we have 3 minutes and 55 seconds left here on this 5-minute bar. It's a good chunk of time, but it'll go by quick. And when that closes, if we saw that close like right up here, right now, gotta tell you, I would have to think about getting long. But when we see big news pushes like that, an issue that's very real is Trump done talking to Fox News? Because if he's not, then that probability of something hitting that moves things starts to throw off the edge. So 3 minutes is a good amount of time. I like that we have that left here on this 5-minute bar for us to see if we get any additional headlines. And if we don't, the probability of getting more just starts to decrease. Doesn't mean it's gone. But I guess all that to say, like if we saw a big red bar like the one we got, and then you roll over, and you know the next bar closes in 30 seconds, let's say. I don't know, we're trading a 30-second chart, for example. Would I get long if it closed like right here? I'd probably have to hold off because for all we know, Trump is just taking a break in his comments to Fox News, and we're going to get another headline that dumps the thing another 100 points. But as minutes and minutes go by, we don't get any more, the probability of getting an additional one goes down. All right, we have a headline from a CNBC reporter on X. They said 2 government officials tell me U.S.-China trade talks are still ongoing in London. Earlier, remember, they said they were done. Apparently, they're still ongoing in London, despite some reports in the last few minutes saying otherwise. All right, they acknowledged it. Talks are likely to wrap, quote, soon but not yet. Okay, we've got 47 seconds left on this 5-minute bar. Now, this is a really interesting scenario because with big surprise pushes like we just saw, purely based on price action, it's really common to get a second leg. However, when it's based on news, the probability gets murky, even murkier than it already is. Yeah, that bull bar is reclaiming more than half of this bear bar, if you include the wick. We have to consider that 50% retracement. I mean, look here. Actually, you have a good view of it already. You're going to get a lot of longs sitting long here on the downside of this channel. Here. And when this dumps off, what are they doing? They're averaging in, right? Buy. So where is the average price of a whole bunch of longs? Well, it's going to be somewhere in here, right? And what happens when they get there? They sell at break even, and that adds some selling pressure. And in addition to the probability being above 50%, that when you get a big surprise bar like this, that even when you get a retracement, you often get a second leg. This kind of clouds things for me. Let me give it another bar or two. I want to take something here, but not yet. Yeah, so Dominic says 830, 21,830 is where sell volume spiked. That was kind of right ahead of the low of day at that point. So I suppose I'm not surprised by that. You get a lot of selling pressure looking to take out that low of day. Which we did, man, and a lot of stops got triggered on that low of day. See, the market feels a little hesitant here. I think we are seeing a few of those average in longs probably hitting out at break even here. Okay, so no additional headlines in the last 7 minutes. Looks like things might be slowing down as far as those headlines hitting. And the last one we got was that CNBC reporter sending out a post on X. Well, today so far has kind of turned out to be an eval day. I'm looking for funded trades here. You know, that's one of those filthy moves, man. If you're sitting long, like kind of like a... Like if someone got long, maybe early Asia session last night, I'd have to look at a chart. Or maybe just early this morning. Like the wee hours of the morning. That's one of those moves that's just filthy. Stops you out and goes right back to the range. Which, by the way, is going to happen. If that just happened to you, I really wouldn't feel too bad about it. It's going to happen to everybody. Just got to keep that risk managed. I mean, there's no way to know where it's going to stop and turn around exactly. Roy says, Nico, do you use Bollinger Bands and or MACD? No. No. As far as the bands, I, in the past, have used, and I've been a fan of, the plus or minus 2 standard deviation bands on volume weighted average price. That's kind of my version of like bands, because it just tells you when the market is moving plus or minus 2 standard deviations from volume weighted average price. I have used that. And I'm a big fan of that. MACD, I think, is overrated. I'm not a fan of MACD, RSI. I removed both of them. I used to run them, and I removed both of them from my charts years ago. But every indicator, I think, is overrated. Even the volume weighted average price bands are overrated. Even the VWAP itself is overrated. It's heavily watched, and that's it. You have to stop it right there. It's a self-fulfilling prophecy. It's watched. It does represent something real, literally the volume weighted average price. But what does that mean? Does that take precedence over price action? In my head, no. So, indicators to me start and end with a self-fulfilling prophecy. Hey, are they watched heavily enough on this time frame that I'm looking at to make people make different decisions? If the answer is no, I do not care. If the answer is yes, I'll look at it with a heavy, big grain of salt. I think it's more helpful just for context than anything. All right, we're right back up into the range. So, to me, I'm still looking at this as the range with, in the back of my head, knowing, you know, hey, is it possible that this bull trend continues and breaks through the high of the range off of some strength that we didn't have previously? Yeah, it's possible, of course. It's always a two-sided market. Anything's always possible. But I'm watching to see if we can get a nice test toward the high of the range and then a small little bear reversal bar, and I would love to see that, and I'd hit that short. All right, now current high of day. Can you see it? Yeah, you can see it. Current high of day is right there. Kind of right ahead of 21.9, 893. So I would call the high of this channel anywhere in between kind of 886 and 893. A push through there, I would still not call it a break. Again, a lot of people will look at a clean break of 893 and say channel's breaking out. I think a lot of people are just looking to sell a little bit higher. You know, this looks really strong, but you got to look back. I mean, we're kind of just in the middle of the range again. I think people are going to take note of that. So let's see if we get a nice little test of the high, and then again, a small confirmation bear bar that I would love to sell the rollover of. You know, that bar right there, that 5-minute bar, 115, 116 points on the range, that might be, I think that might be the biggest 5-minute bar we've seen in a little while. Which is kind of sad, to be honest. Man, I mean, a couple months ago with tariff talks, we did see, like, once. On a 2-minute bar, the range of a 2-minute bar expanded to like 400 points. It was pretty wild. And this is a 5-minute bar, and over 100 is surprising right now. It says a lot about the current state of volatility. But we're kind of back in that range now again, so I'm treating this like I was treating the range previously. Just with the understanding that this has now occurred. So we'll see if the balance of the bears and bulls shifts at all when we test that little high. I still think bears are going to come in and try to sell any reason to sell above anything. Doesn't mean they'll succeed, but they'll be there. I really would like to get short near the top end of that range. Yeah, I'd classify that as a... Well, I mean, you could call it a false breakout. I'd call it a big old news bar with a return to the range. It was really less of a price action attempt and more of just a news breakout attempt. That got reversed because we're in a range market. Again, you have to assume, at least I have to assume, that all these breakout attempts are going to fail until I get hit on the head that, hey, you know what, this is now a clear trend. In a range market, it's really important to stay as dumb as you can. Still manage your risk. Understand that the breakout is coming, but it's probably not this attempt, probability-wise, right? Chances are it's not going to be this attempt. And that goes back to not trying to, you know, being too smart for your own good is a huge thing in trading, especially in range markets. All right, guys. Well, I'll tell you what. I mean, today I think maybe I'll trade an eval or two, maybe some tests. But I'm keeping an eye out for little range trades with all the fundeds. Just nothing yet. I mean, it's sometimes doing this is how you keep your edge. Again, if you're more of a beginner, even oftentimes intermediate, not trading when the market looks like, well, I suppose this, especially before that big news bar. Not trading that, I think, is never a mistake. As you get more and more experienced, the range markets get a little bit, I suppose, easier to make money in, because you end up making better decisions. You stop taking trades in the middle of the range, stuff like that. But I think a lot of times in the early days, the range markets look really attractive. Here we are getting a push through the high, at least an attempted push. The range markets look really attractive because they're slow, and it's like, well, I can just kind of scalp because it always comes back to my price, but the entries suffer. The equation doesn't really make sense necessarily as far as reward to risk and probability of the trade. And I do think trends are easier, quote unquote, to trade as a beginner. And I think a lot of people kind of assume the opposite. And I think the ranges are a good time to hold off in the early days, and eventually you can dip your toe in and make some money in the range markets, but they are definitely a little bit tougher. I mean, kind of makes sense, right? Naturally, because the market's in this area where it kind of agrees on price, so it's a little harder to make money. There's just less movement. It makes sense. So anyway, guys, good day to try to trade some tests, some evals. Take Profit Trader, as always, at least as of late, with code BIG, B-I-G, is 30% off. No activation fee. I shouldn't say as always, because that's not necessarily true. And Apex, by the way, this started yesterday. 80% off with code BIG, B-I-G, and single day pass. You don't have to pass in one day, but you're allowed to if you use the code. So, all right, guys, I'm going to keep an eye on this market. Get some lunch. Maybe I'll eat it here at the desk. I don't know. And we'll see if we can make something happen here today. Remember, tomorrow morning we have CPI. So a little bit of extra volatility pretty much from here into the close. Wouldn't surprise me, but still remembering that we're in a range market. Big number tomorrow morning, though. CPI, the big headline inflation read. We get PPI on Thursday and the Michigan prelim number on Friday. So volatility should increase here to a healthy degree in the next few days, which is exactly what we need. All right, guys. I will see you tomorrow just before market open. Be smart. Let it come to you. Manage well. See you in the morning. Have a good one.